Joining us right now, the Wall Street Journal's global economics editor, John Hilsenrath. John, good to see you. Thanks so much for weighing in here as the Journal writes about this morning. Is it surprising that the administration wants to roll back this mandate?
No, it's not surprising at all for a couple of reasons. One is, Donald Trump's, an important leg of the stool of his economic policy is rewriting, rolling back regulatory oversight. And, here's an area where, there's a view that the government regulations are impeding banks from lending more, and so they're trying to redo this. The other thing is, let's not forget that the Treasury Secretary, Steven Mnuchin, ran a bank, One West, so they ran up against some of this CRA oversight, and it's a focus of his attention too.
John, it's Dagen McDowell, but it will. How could it help the economy? And how could this rollback in regulations, because as the Journal points out, they're going to try and make the Community Reinvestment Act, parts of it, more modern, transparent, and consistent, something that Mnuchin talked about even in the middle of last year. But how could that not only help those communities, but maybe improve the economy even more than we've already seen?
Well, so I'll answer that, but before I do, I just want to tweak one phrase, which is this idea that they're rolling it back. I'm not so sure I would call it a rollback as much as a rewrite. They want to redo the way some of this is done, and that gets to the question of how it could help the economy. So here's an example. So right now banks aren't getting credit if they do infrastructure loans or small business loans in certain communities. So one of the things they want to do is make it easier for banks to get credit for doing infrastructure and small business lending. If you bring a business to a low-income community, then that actually is going to help that area economically. So, I think there are plenty of ways where this could help. The other point that I would make is one of the things that they're talking about is getting lending into poor rural areas. A lot of CRA lending regulation was focused on poor urban areas over the last few decades, and one of the real problems in our economy right now is banks actually pulling up stakes in rural areas. And so one of the questions they're looking at is, what do we do to help some of those communities too?
And that distinction too, John, that you mentioned at the outset of the rollback versus the rewrite would seem to me would be important, even politically. Won't there be pressure after what we all went through in 2008 not to be seen as, going back? If you use the connotation of a rollback would be, oh, let's not go back to where we were, where some people would argue that deregulation was a part of the problem rather than now it's being presented as being part of the solution. They don't want to be presented as, undoing these regulations, right? Too much. So,
exactly. I think there certainly will be fights over what they do. Community organizations are going to push very hard to make sure that the CRA isn't completely defanged and that, banks are basically told they don't have to abide by these regulations anymore. So I think there is going to be a lot of political fighting. You can be sure when Steve Mnuchin goes up to Capitol Hill, he's going to be questioned very aggressively by Democrats in the House Financial Services Committee and the Senate Banking Committee. So they certainly have some messaging issues related to this.
Yep. General, go ahead.
John, do you agree with the bank's claim that this will give them more flexibility and actually can help the poor more? Is that factual?
Well, I mean, we have to see how the rewrite works. There's a really fine line here that they have to draw. Take one example. When banks make auto loans to subprime auto loans to low-income households, on the one hand, the government's been saying, we want you to lend in poor communities and to poor households. On the other hand, they're saying they don't want you to do predatory lending, stuffing credit into people who can't afford to pay back their loans. So, this area of regulation cuts both ways, and it's why it's a very fine line for them. Yeah. If they push too hard on making sure that low-income people aren't stuck with loans they can't pay back, then they end up hurting their CRA ratings, too.
John, I think it's really interesting that we haven't really seen the impact of that rollback in regulations that the president has done in the banking sector. That's one thing that Jamie Dimon mentioned yesterday. He said, look, I speak with all my friends in other industries, media, telecom, utilities, where they've actually seen the impact, energy, they've seen the impact of a rollback in regulation. We haven't yet. We haven't in the banking sector. There's a lot of new people running agencies, but they haven't implemented the rollback yet. That tells me there's a huge runway of an alleviation of pressure on the banking sector to come, even if they have a tough quarter this Friday with their earnings.
You know, this town, you know, some people call it a swamp. You could also call it a red tape town.
Yeah.
You know, there's just so much red tape in this city, and the way the rules are set up is, in some cases, it takes years to rewrite regulations, not just in banking, but also in, you know, for instance, the environment. You know, the whole pulling out of the Paris Accord is something that's going to take years to unfold.
Yeah, like it takes 13 years to build a bridge. 13 years to build a bridge, Dagan.
When they propose a new rule, there's comment period. You know, this is all part of accountability.
Right.
There's comment periods. People have to have a chance to say how this is going to affect them or whether they're for it or against it.
Another 6 months.
So it takes a lot of time for this stuff to play out. And in the case of the Community Reinvestment Act, they haven't even proposed anything yet.
Yeah.
So you're right, Maria. It's going to take a long time for this stuff.
But you talked about
change.
infrastructure and building a bridge. That's one of the reasons that infrastructure is in such a bad condition. It's not that the funding isn't there, because the funding is there in the private sector. It's the fact that nobody's going to make an investment commitment if that bridge and the toll on that bridge or highway might be 15 or 20 years out.
That's right.
And Bill, but you're talking about the earnings for the banks, the money flowing to their bottom lines. Banks spend billions upon billions of dollars just complying with the Community Reinvestment Act. You get out of the way, make that easier. That goes right down to the bottom line and the stock prices.
That's why I do think we might see some underperformance in this quarter, the fourth quarter, when the banks start reporting tomorrow, because we know the trading is under pressure, particularly fixed income trading is under pressure. We know that loan growth hasn't been where we expect it to be. So I think we could see some misses in the banks, but longer term, you know, when this regulation rollback starts to take hold, that's going to be huge for the bottom line earnings. So longer term, the banks have more upside.
Rocket ship.
Plus, we talk, I mean, rising interest rates, too, that's not necessarily a bad thing for their business.
That's a great point.
But,
Yeah,
you know, for
it
everybody
seems like
else.
we're entering a period which is going to be very positive for the banks. Rising interest rates
one word
and
of caution,
rollback. Go ahead, John.
One word of caution, Maria, is, you know, the rollback of regulations is also a change in the regulatory environment. You know, and a lot of businesses, including banks, are like they've already invested a lot of infrastructure into abiding by these regulations. When you change it, that's another change they have to deal with.
Yeah, that's absolutely right. That's true. John, good to see you, sir. Thanks so much.